Hey everybody, thanks for joining the TMC Ask Me Anything. We're going to get a couple minutes for everybody to join, then we'll kick it off. Thanks for your patience. All right, it's 6:01 p.m. Eastern Time. I'm here in New York City, as you might be able to tell from behind me, right over here. I've got the Run TMC behind me. I've got Liam Gallagher up on the wall. We're ready to rock. Appreciate all of you joining for the TMC Stock SubReddit. Ask Me Anything, and I'm Craig Shesky, the CFO of the Metals Company. I'm very excited to be with you here today, especially given Monday's exciting strategy day in New York, the amount of energy that came through that crowd from the retail investors, institutional investors, a research community, many of which have come out with very positive notes since then, including Cantor Fitzgerald, AGP, Wedbush, H.C. Wainwright. There have been a lot of folks waiting for this update, waiting for the PFS, waiting for more news on the TMC permitting front. And I think this is going to be a great opportunity for us to give you as much detail as we can. Keeping in mind, too, that we are going to be reporting again next week, and you'll see a release noting what the time of that call is and some of the details. But I'm happy to let you know now. It'll be post-close on August 14th, Thursday. So mark your calendars again for 4:30 p.m. And we're looking forward to providing you some additional updates. So whether you're a longtime shareholder, a curious observer, or just someone fascinated by the future of deep-sea mining and nodule collection, appreciate you taking the time. Now, first of all, I was told I have to write this out by hand to show you our Reddit AMA. And these are my details. There's the subreddit for TMC_stock. My handwriting is absolutely awful, so my wife did this for me. Thank you, Elizabeth. But here we are now on August 6th at 6 p.m., a few minutes after, and it's time to hit go. Given we've had a few historic months, really since March, it's shocking to believe just how much has happened after 14 years of what has been an impasse at the International Seabed Authority. We've had, my gosh, in March 27th, after we had the 10K come out, we let people know we were pivoting to our U.S. strategy. In April, on August 24th, we had the executive order from President Trump. And even before that, the stock started running as people, whether it's Reuters or Wall Street Journal or the New York Times, really started picking up on the fact that this U.S. administration was going to prioritize seafloor resources. So the executive order was very important in that it laid out a directive for the Commerce Department to expedite permitting, but also for other departments such as Department of Defense, Department of Energy, Development Finance Corp, Exim Bank. Think about the tools that can be used to support this industry. It's one thing to permit, it's another to actually build and get things ready for production and make America mineral independent again. And in fact, as I'm speaking now, I was hoping to have our chairman and CEO, Gerard Barron, join us. And I think he's going to be joining for the next one. We promise, assuming this goes well, we're going to do this again coming up this fall, and Jared's going to be on it. The reason he's not joining this is he's in DC, in the back of an Uber, going from one very exciting meeting to the next. So we can't wait to update you with anything we can in our Q2 reporting coming up post-close on August 14th. A few other things here, of course, I would be remiss if I didn't mention the fact that we've added a couple of outstanding board members recently, including Michael Hess and Alex Spiro. We, of course, had a couple of important capital raises as well, including the $85 million investment from Korea Zinc. And for those who were in New York for the strategy day on Monday, they had a chance to see Chairman Yun Choi from Korea Zinc talk about his excitement for this project, as well as others, including Edward Hirma and Stephanie Hirma from Allseas, basically noting just how excited they are after being a long time and continuing to be long time equity holders of TMC, as well as our partners. It's great to see this momentum continuing for partners like Allseas, who have participated in nearly every equity raise we've had since 2019. So both the long-term partners and the new partners see where this is headed, and hopefully everybody, whether it's on the retail or institutional side, can see why we're so excited about it. Finally, we had our pre-feasibility study come out on Monday, along with an initial assessment for the rest of the resource across Snorri and Tunnel, indicating a 23.6 billion net present value today for those resources. So walking through some basic math, if you apply a average multiple of explorers and developers on that initial assessment, call it a 35% rate, and then maybe something like 60% or so, top end of the range for the pre-feasibility study, which is of course higher certainty, you can quite easily see that even with the existing resource today, pre-production, this stock has a long way to run. And a $10 billion market cap is something that we believe is justified by that resource. And then as we move it closer to production, one should expect multiple expansion, given the fact that you have a lot of producers trading around 1 times net asset value. And then beyond that, of course, the resource can continue to grow. We can convert more of the resource to reserves, like we've done for 51 million tons in the NORI-D area. And then going forward, improve the business, get more efficient, stay as lean as possible, at the same time making smart investments such as building refineries in the United States to not only drive this material through the Panama Canal and into Texas and refined into further higher value products, but ensuring that the revenue coming to TMC is as high as it possibly can be. So with that, I think we're going to kick it off. I'm going to dive into a deck that's been prepared with some of our folks on the comms team, and I'm going to be gathering questions from the Reddit thread directly. So even if you haven't added one yet, please do continue to add, and I'll eventually see it. While it isn't ask me anything, I may not answer everything, but I'm going to do my best. And importantly, feel free to dig into truly anything. It doesn't just have to be about TMC. I came to this company as a research analyst from a hedge fund here in New York, King Street Capital. I was there for 12 years, a $20 billion fund that historically focuses on event-driven special situations. And that includes companies that perhaps are misunderstood by the market. And having the time to dig in and establish a thesis over many quarters is what really led to the conviction at a fund like King Street to build up very large positions, such as Lehman Brothers, where buying trade claims and bonds out of bankruptcy was one of the largest positions for that firm. But that didn't occur until about 9 months after some of the initial news in 2008. So it takes a while sometimes to build conviction. But certainly in my experience, when you get a high conviction idea, it behooves you to stick with it. And even in the down days, it's a good time to be adding. And one of the great things about this community, one of the great things about the people that work for TMC, even through the darkest days, when you look back to 2021, like Jared said, when he rang in the opening bell, the closing bell on NASDAQ on Monday, there were clouds forming when we rang in the bell back in 2021. We knew that we didn't raise as much money as we expected through the go public process. There was a default in our pipe. Things were looking pretty dire. And yet the main core of our management team, the core of our board, really has stuck around. And we've been able to push this forward with a lot less cash than we thought we would have. And one of the reasons for that is that a lot of us are major shareholders, and we like getting compensation and equity because we believe in the story. And that's the reason when you look at TMC today, there are new members such as Rutger Bosland, who joined us from Allseas a couple of months ago as our Chief Innovation and Technology Officer. And it's great to add that high-level talent. It's great to add new board members. But the reason everyone's sticking around is because we're all owners of the story. We're not tourists jumping from one mining company to the next. This is truly a new revolutionary industry. We all see it, and we hope that you all see it too. So I'm going to start right with a question from O. Jimmers, number 28. Late question here. Given TMC is pursuing a permit under DSHMRA and NOAA, and that the U.S. is a non-party to UNCLOS, are we giving any merit to the license holder? Are we giving any merit to license holders under the ISA? For example, is TMC going to respect the boundaries of areas held under the ISA, or could TMC seek or apply for licenses in other areas within DSHMRA? That's a really good question. So thank you for that, O. Jimmers 28. The strategy behind this is something we talk about quite a bit. And while the U.S. does view most of the Clarion-Clipperton Zone as, open waters that are subject to freedom of the high seas, which is the construct legally in international law that existed prior to the UN Convention on the Law of the Sea ever being formed and then ratified in 1982. Well, the U.S. never joined up to that, and the U.S. never joined the ISA. However, in the 1980s and 90s, there were quite a few countries, well, maybe not quite a few, I think it's about 8, that had something known as reciprocal agreements with the United States, where the U.S. said basically, we will bilaterally respect your claims in international waters if you respect ours. One of those countries actually includes China. China and the U.S. had a reciprocal agreement, and there's a question as to whether or not that is still current and whether or not that's still respected. As far as we are pursuing it, we have a resource of 1.6 billion tons of these nodules through exploration contracts granted by the ISA. Our sponsoring states of Nauru and Tonga, we've now signed updated sponsorship agreements with both of them, and we feel very good about where those relationships are. And those countries and our partners, they know that there will be economic benefits to Nauru and Tonga as we begin commercial production through this U.S. process. So it's not something where we've been partners with them for 13 and 14 years, and we're just going to then go through this U.S. process and forget about it. No, we've been working hand in glove together. They've been, regulating us and sponsoring us for quite a long time. So it makes sense now that we're going to continue on this new path together. And that's also very important for the U.S. State Department. Think about what's been happening in the Pacific over the last year plus. China has been using deep sea mining as a carrot to entice relationships with other Pacific Island nations. There have been talks of an agreement with the Cook Islands on deep sea mining with China. Then we saw this week that the U.S. is courting the Cook Islands on deep sea mining, which we view as fantastic. It's great to see the ecosystem of potential deep sea mining continue to grow. We view the nodules in the Clearing Clipperton Zone as the most economic today. And even if there's a flow sheet for some of those Cook Island nodules to, let's say, extract the manganese, we view the the revenue per ton in the Clearing Clipperton Zone at being more than 2x what you might get in the Cook Islands. But still, this is not something where TMC wants to be the only deep sea nodule collecting company in the world. So we view all that as positive. But I would like to step back and just note that China is trying to use deep sea mining to drive geopolitical decision-making within the Pacific. And now the U.S. is seeing this as an opportunity to deepen relationships or even establish new relationships with many Pacific Island states who might see deep sea mining as a major economic engine. So I don't want to overstep here. I don't want to say that this is the most important issue in the Pacific, but it is clearly a major economic issue that the U.S., including the Defense Department, the Navy, Indo-PACOM, they care about and know about. And it's something that China knows about and cares about too. So it is a very good opportunity to be in TMC shoes, where we are developing, not just exploring, but developing the world's largest estimated source of some of these metals, including the largest and second largest nickel project on the planet. We have very good ground and a very sought-after neighborhood, and that puts us in a very strong position to drive very positive economic terms for our shareholders. So the question was, are we going to respect the boundaries? What I would say is there are certain boundaries that we will continue to respect. We also want to be in a position that the U.S. State Department, in doing their conflict analysis on any applications that we put to them, has an easy decision to make, to say, look, if one of our key allies or even an adversary, is controlling an area where it doesn't make sense for TMC to go in and grab it because it would ruffle too many feathers or it would lead to a conflict that the U.S. may not want, there's enough good ground that we already have and enough additional ground as our portfolio grows that I don't think we're going to have to go down that road. But look, if you asked me 3 years ago, would we be going down this U.S. process? I wouldn't have said so. 3 years from now, who knows what could happen? We are a public company. We're an SEC-regulated company. We're listed on the NASDAQ. And what I can tell you is shareholder value is at the forefront of our mind, as is creating value for all stakeholders and providing the metals necessary, not just for the U.S., but for the entire world, for energy, infrastructure, defense, and manufacturing. So please stick with us on that, but we will continue to be very adaptive whenever new information comes to light, as I think you've probably noticed over the last 6 months based on some of our actions. So next question up from David Higgins 99. I saw the Cook Island news today that with the U.S. government supporting the Cook Islands for seabed minerals, my understanding is Odyssey Marine has 2 or 3 license areas. And how do we get exposure there? Well, look, OMEX is listed. Feel free to buy their stock. I know Water Tower, for example, covers them. Dimitri Silverstein, he also covers us. I would say, the reason that I left the buy side to join TMC was that I, dug into the technical reports from 2021 when they first came out. But even before that, there were technical reports from 2016 and 2018 where I was able to dig into the resource and realize this is the place to be. The Eastern Clarion-Clipperton Zone with high concentrations of nickel and copper as you're close to the Rockies and the Andes, that's why the nodules that we have here are forming with such attractive economics, because these nodules have a lot of nickel, they have a lot of copper. The further west you go in the Pacific Ocean, it's more cobalt heavy. So if cobalt prices double or triple from here, it could move in a different direction. But we're very focused on the Clarion-Clipperton Zone. Sorry, one sec. Can you guys hear? Is the microphone back? Somebody give me a thumbs up on the chat. We'll keep going. 1 second. All right, all good. Sorry about those technical issues. Sometimes a nodule will knock over a microphone, but we're happy to roll with it. So look, in terms of the Cook Islands, we hope that they're able to develop that. I think it's great to have a lot of other folks developing some of these resources, but for now, we're focused on the Clarion-Clipperton Zone. Next question, Candyman6971, where can I get that shirt? I assume you're not talking about the one that I'm wearing right now, and you're probably talking about Run TMC behind me. If you just Google it, I'm sure you're able to find one. But it is important to note we're going to have quite a bit of merch, hanging out in New York City. Most of it was actually taken from our strategy day. Can't wait to do another one of those and get some new merch as well. But yeah, certainly, I'm sure you can find it if you need to. I know our head of technology, Andy Jones, has one. I know Steve Jurvetson on our board wants one. I didn't get to hear Steve doing Run DMC for karaoke, but maybe we're going to do that again next year as promised. Coming up from TO 1927, can we elaborate on scaling capabilities, reusing existing oil drillship infrastructure, and the speed at which proliferation is possible of the new mining technique? That's a really good question. So one of the things TO 1927 that we're focused on is getting into production quickly, as quick as we can. And I'm sure we'll get questions on how quick is quick enough, but making sure that from there we can continue to ramp in a capital light way. There will be a point in time, just like for offshore oil and gas, where you're going to have dedicated vessels for nodule collection. So those dedicated vessels might have 3 collectors, 4 collectors or more on each one. For now, what our plan is and what our PFS has laid out is 4 vessels for this pre-feasibility study, an 18-year mine life, and those vessels have 2 collectors each. But it doesn't make sense just to use something that was built for X to ramp up most efficiently for Y. So there will be a point in time, and it's probably going to be next decade, that you have dedicated deep sea mining vessels. But for now, we're very happy with the amount of available vessels we see in the market. We basically, doing some math with some of our partners, we think there are more than 30 available drill ships that are nearing the end of their life offshore, at least for oil and gas, that actually would be very well suited for conversion into nodule collection. We already have the first from Allseas, the first deep sea mining vessel actually flagged as such. And we see quite an opportunity, not just with Allseas, but others in the industry are probably going to look to this as the industry starts to mature, taking drill ships and converting them. So in order to get those 3 additional drill ships to hit some of the target production, over 12 million ton per year nameplate capacity from the pre-feasibility study, we think using existing drill ships is the way to go. There are quite a few of them actually moored off the coast of Tenerife right now. If oil prices jump up to 150 or 200 a barrel, that's something where availability might go down, but roughly 30 plus ships we think are available, and a couple more are going to be what we need to hit some of our production targets getting into later this decade and beyond. Question from Stedabro, STEDA Bro. What key milestones or achievements in the next 24 months do we believe will be the most critical in creating shareholder value and demonstrating TMC is on track towards its long-term vision? Well, in the next 24 months, the key is the permit being delivered, the commercial recovery permit. But at this stage, I don't want to go too far here, but we do feel very strongly that it is a question of when rather than if. Previously, we were dealing with a regulator, the International Seabed Authority, where it almost felt like they were going out of their way to reinterpret agreed upon provisions of previous draft mining codes to make things harder for commercial operators. We know, for example, the Chinese delegation at the ISA is focused very much on what they can do to slow things down until such time as they are ready to go, which, if you believe Barron's article and the AFP article that came out a couple months ago, they are several years or up to 5 years behind where TMC is on the technology. China will get there. Of course they will. They're putting a lot of assets behind this. They're putting a lot of resources into it. But it's still something where TMC has this unique position of being in a lead versus China, which is dominating the processing and refining of many of these critical metals. And that's one of the reasons the U.S. views us as a very attractive champion for this industry. Because whether people think we were smart or not to do it, we've spent nearly $600 million getting to this point. And a lot of that was spent even pre-going public to start some of the environmental work that is now driving an environmental impact statement that we think will give confidence to the regulator to give us the permit, not just this time, but again and again and again, as we even go beyond NORI Area D. So we feel we need to take advantage of this window of opportunity. And I think the permit, the commercial recovery permit, is going to be important for that, but it's no longer driving our timeline in the way that the ISA mining code was driving our timeline previously. We noted to the market in, I believe it was November of 2024, that no longer are we going to be providing a timeline on when we're going to start production. At that point, we said, look, we're going to wait until there's more regulatory progress. We're going to, in June of 2025, at the time we had said that's when we were going to launch these applications to the International Seabed Authority. Unfortunately, the International Seabed Authority hasn't hit any of their deadlines, and they missed another one in July of 2025. So we feel good about our view of pivoting to this U.S. regulatory approach. But again, back in November 2024, we told the market we were going to wait for regulatory certainty until we raise money to start spending on the hidden gem vessel. That was 9 months ago. So yes, for the last 9 months, there hasn't been a lot of heavy work going on with a hidden gem vessel. And now we're getting to the point where we and Allseas and TMC's board are seeing enough regulatory progress and seeing enough strong indications from this administration that the commercial recovery permit will come, that we're able to go out and raise money from Korea Zinc and from the Hess family and from Brian Pace Braga and from Allseas, raising that money to put us in a position where we can make that investment decision prior to the 100% regulatory certainty. So I know a lot of people are looking at a commercial recovery permit and saying, why can't it come next week? Why can't it come in a quarter? Why can't it come in 2 quarters? Well, the final permit has to go through various legal requirements, including a NEPA compliant environmental impact statement, which, by the way, the data of which we have, and the environmental impact statement here is much shorter than it would have been in the ISA process. But we have to ensure that that plays out in a very measured fashion, and that there's a public comment period, a stakeholder consultation period, and all of those boxes can be ticked. This isn't a rubber stamp. This is a very robust process, but we feel confident that the permit will ultimately be granted. So what can we be able to share with the market to say, listen, we expect that this is coming. We feel the confidence, and our board and our partners feel the confidence to actually invest and get ourselves ready for commercial production and start that very, very soon, whether that's weeks or a month away. Start making those decisions so we can hit our timelines. That's why we have the confidence to tell the market earlier this week that Q4 2027 is our targeted production date. This isn't something that we can just snap our fingers and say, get the boat on the water and pump as many nodules as you can tomorrow. The hidden gem vessel was using a pilot collector vehicle in late 2022, and it lifted over 3,000 tons of nodules to the surface over a multi-week test. And there were a few days where it was running closer to full capacity. Well, 3,000 tons isn't going to cut it. 3,000 tons is less than we anticipate producing per day from that vessel. And we need 2 collectors. And those 2 collectors need to be 15 meters wide. And the riser pipe has to go from 8-inch diameter to 18-inch diameter. We have to ensure that the compressor spread is strong enough and powerful enough to pump more air to lift more nodules. And we in Allseas have been very clear, and we told the market in November of last year that we're not going to be going out there and adversely diluting shareholders to raise money at poor terms. We would rather wait until the market starts to realize where this is headed and then take on some money and then start spending it to get ourselves ready for commercial production. I think that's exactly what we've done. And I think bringing in partners like Korea Zinc and getting more investment from the Hess family and Brian Pace Braga and Allseas, that's all indicative of their belief in this and their belief in our timeline. So a few other things to look at in the next couple of months. We do anticipate, of course, coming up next Thursday, you're going to have our earnings call, so we'll have some more detail for you. I would also keep an eye on what other headlines come out of DC, not necessarily just on the commercial recovery permit, but there has been a lot of additional focus on critical minerals, whether that's from the Office of Strategic Capital, Exim Bank, DFC, or otherwise. And we are having all the conversations necessary to make sure that people know that we continue to have the full-throated support of the U.S. government. So timely spot, 590 fine. He said, "Hi, Craig, why do we have to wait till 2027 for nodule harvesting?" I think I touched on that, but look, the takeaway is we, as of Q3 of last year, made quite clear that we are going to not spend the money on the hidden gem vessel until we had a little more regulatory clarity. We feel that we do have that now. So stay tuned, but this isn't something where we're just going to put the hidden gem vessel out as is. We want to make sure when it does get out there that this is a ongoing and profitable operation, because once you see this working from vessel one, once you see that this can be profitable even in the early stages of this industry, that's going to attract more capital. That's going to attract more strategics. That's going to attract people who own these vessels to provide them to us to make sure that we can ramp up in a very capital efficient way. So I see question number one from Cool Story, though. Great name. The question is about operational and regulatory de-risking. What's the single biggest operational or regulatory risk that can derail revenue generation? How do we plan to neutralize or mitigate these risks, including but not exclusively ISA and member state litigation? Outline specific legal and operational safeguards to ensure uninterrupted seabed extraction. Cool story, though. It's a great question. I could probably take this entire time answering that. What I would say is that we spent quite a few months leading up to the March 2025 decision to pivot to the U.S. So quite a few months diligencing this with lawyers, not only from the International Seabed Authority, but also from the U.S. Commerce Department. We know that there is really no legal path for anybody at the ISA or those member states to block us or the U.S. from doing this. There is no court in which an ISA member state can sue the U.S. on grounds of, let's say, not abiding to UNCLOS, because the U.S. has never ratified UNCLOS. The U.S. is not a member of the International Seabed Authority. So we have a very strong legal footing here. Treaties do not apply to countries that don't sign them. That's actually, per the Vienna Convention of Treaties, it's quite clear. You can't say, hey, 100 years ago, Germany, you have a treaty with France, and then you have to make UK abide by it. It doesn't work that way. Treaties are only based on the acquiescence of particular countries to actually put the signature on the page. So we feel very confident that there's not much that can be done. What could be done is, some NGO, for example, Greenpeace or otherwise, I'm sure people are cooking up ideas on how they might be able to, once a commercial recovery permit is granted, let's say launch a lawsuit against the granting authority of NOAA. And that's why it's very important for us to follow the legal process to a T and to not say, I'll just, rely on some presidential decree or rely on some piece of paper that says TMC, go ahead and start doing it. Well, that's not going to necessarily hold up, not just in a future administration, but that makes it a little bit less bulletproof if some rogue NGO tries to take a case to some rogue judge in the Ninth Circuit. And somebody in California might say, yeah, I agree, you shouldn't have granted the permit based on X, Y, or Z. The good news for us is we actually have all of the data to support the granting of this commercial recovery permit and future ones, no matter who is in the White House. So taking that data and science-driven approach really puts us on strong legal footing. And the good news is there's not really a natural venue for any ISA member state nor the ISA itself to sue TMC nor the United States. Question number two from Cool Story, though. Over the next 3 to 6 years and 6 to 10 years, what are base case and best case projections for annual revenues, EBITDA, resulting market cap? That's not something that as a NASDAQ listed company, we're comfortable to provide. And no forward-looking statement would have enough caveats for us to put that into a Reddit's AMA. What I would say is please stay tuned for our earnings call next week, where we're going to, again, remind people of some of the projections in our pre-feasibility study and our initial assessment. Most of that information is already out there, so I would encourage you to not only review the tables for the pre-feasibility study and initial assessment, which have a combined net present value of $23.6 billion today, but also we will be putting links to those documents very shortly on our website, so you can dig into the many hundreds of pages of detail, but the summary information is already there and available. Question from SE Law 20. Question about share dilution. So it reads, we're all aware that for a growing company, dilution of shares is a normal practice, especially over a 500% increase in 6 months through the exercise of cheap warrants. But there's a question about the amount of dilution that's happening as insider warrants are being executed, as well as a vote for further dilution of shares to retain and attract talent. These dilutions do seem like they're getting excessive for the benefit of insiders. What can we say about it? And how do we anticipate for talent requisition? How many more insider shares or warrants would exist? Look, it's a great question. And as I put my hat on, going back to when I was on the buy side, I would ask the same question. The reality is we're in this unique position where as a new industry is forming, there are a few dozen people that are really kind of the best of the best in this. And that's people that are coming from the offshore space. It's people that are coming from the onshore space, people who have developed flow sheets to extract metals from nodules that nobody else has done commercially. It's a management team that really over the last 5 years, pre and then post going public, we've had a lot of our compensation tied to TMC stock, and we've been happy about that. And because of that, because Jared and the compensation committee on the board made the decision to, still pay people in terms of, a strong and robust number of shares, that has kept the team around. So why are we here today, even over $5 a share when we were below $1 about 9 months ago? That's because all of us are invested. We're all owners. We're all shareholders themselves. Now you're starting to see a lot of other people see what TMC is doing, and a lot of other people are trying to catch up. And it's very important to keep not only this core team together, but ensure that there are going to be folks in the offshore space as we get closer to ramping up. There are going to be some amazing engineers, for example, that could be made available to us. And we're at this amazing point where we have a moat around our company, not only for the technology that we have, not only for the resource that we have, not only for the environmental work that we have, and that data that nobody else has replicated, nobody else has done anything close to that. We have another moat around us in the fact that we are able to go through this U.S. process given our U.S. entity in North Carolina. Many of the other, deep sea mining companies with any real prowess, and there are some, elsewhere in the world, a lot of them are in areas where their home country, or even if they're state-owned entities, they are not able to take advantage of this U.S. process that, frankly, has existed since the 1980s. The implementing regulations for NOAA came in place in 1989. So because of that, why would we want to open ourselves up to something where, we don't have the dry powder to bring in a rock star or two, or we don't have the dry powder to retain the dozens of rock stars that are already on this team to make sure that we get this across the line in this very critical next 2 to 3 years, and then can ramp up from there and take advantage of this blue sky moment where really for the first 5 years of this industry, we will be the only ones operating. So is any dilution helpful as a shareholder? Yeah, I understand sometimes it's tough to take, but if you're talking about a single-digit % of the roughly 400 million shares outstanding to ensure that the team is incentivized and aligned with all shareholders. And again, it's not that all of this is being granted and all of it is sort of spoken for, but we want to make sure that we have the dry powder. And some of that has been used, frankly, to bring in some of the key board members that you may not yet be able to see what's going on behind the scenes, but key board members who have, first name basis with a lot of the key people within this administration to make sure that we can begin on time. So I would say it's incumbent upon us to show you why it's worthwhile. But the example from the last 4 years of why it's important to retain key talent through share grants, RSUs, options, warrants, I think it's money well spent. Question from Opening Film 4548. What are the plans for scaling the operations, acquiring more ships? How important is scaling for profitability of the company? Yeah, it's a very good question. Scaling is very important. We want to be able to show that each of these mousetraps, each of these vessels, the production vessel and the system where it's then offloaded to a bulk carrier and taken ashore for processing in an RKEF facility, we want to show it can work for vessel 1 and that it can work for vessel 5 and that it can work for vessel 20. So the plan for scaling is quite similar to the plan for initial scaling, which is use some of the best engineers in the world, such as the ones we work with at Allseas, to not only design, but construct the collectors and apply it to vessels that certain partners can provide to us in exchange for long-term contracts. So down the road, there could be an opportunity to bring in purpose-built vessels and make sure that the efficiency of each can be quite higher. But really, one wants to be in the resource space. I don't want to say owner of the asset because these are in international waters. You would rather have exclusive access to the underlying resource. And then as technology improves, whether it's buying a shovel from Komatsu or getting a haul truck from John Deere, wherever the best assets are going to be coming from, giving yourself the flexibility to take advantage of that. And as technology changes and as the ability to collect more tonnage in a more efficient way ramps up, we're not just locked into one type of technology. So we're going to be nimble, we're going to be flexible. I think you should be able to tell from the amount of pivoting and new information and execution in terms of pre-feasibility study, initial assessment, 3 applications to NOAA. There's a hell of a lot that's happened in the last couple of months for a team of less than 50 people. Think of us less as a big conglomerate with tens of thousands of people around the world. Think of us really as an owner's team. That's how we think of ourselves. We are all owners of TMC stock. We are all coming from various industries where a lot of people have very impressive careers coming into TMC, and we're at the top of their various spaces, many of them onshore metals and mining, many of them offshore oil and gas. And we kind of come together here to execute and keep things as lean as possible. But if anything changes and the technology improves, we're going to be able to take advantage of that. We have a question coming up from Network Diligent 8196. TMC has lined up some pretty big partnerships in the last few months that add significant value and potential to TMC operations. Are there any specific types of partnerships that TMC remains on the lookout for as we approach approval? And then there's another question from him on, could you explain, or him or her, sorry, Network Diligent 8196, I don't want to be presumptuous, but could you explain the delay on the PFS release? Is it a matter of updating to reflect the evolving landscape? The answer to that part is yes. The delay on the PFS was due to the fact that when we announced we would be applying through the US regulatory process, we had to make some new assumptions. Some of those would have been, higher OpEx offshore, given the fact that there are certain requirements of what a crew needs to look like and certain flagging requirements for vessels. But that's more than offset by the fact that there's not going to be some 5 to 7% top line royalty at steady state production, and that's top line. So 5 to 7%, you're talking 20% or so when you get to bottom line at 30% EBITDA operation, which we expect to be far higher than. But the point is that flows directly to the bottom line. And now that we have clarity on this US process, the next step, literally the day after we launched that application in late April of this year, all eyes went back to the PFS. So really, we had to take a little break in the first few months of this year to get these applications ready. We had to take a break from the PFS preparation. But in typical TMC fashion, instead of saying, all right, what's next on the agenda? Let's attack it. Let's get the PFS out. We decided to go one step further. And I credit Jared, and I also credit Tony O'Sullivan, our Chief Development Officer, for having this clarity to say, look, people have been looking not just for economics on NORI-D. Why don't we tell them the economics of the rest of NORI and the rest of TOML? And we've had sufficient data on the resource. There have been resource statements on those areas for many years. Why not sharpen our pencils? But not just us. We're putting it to AMC consultants. We're putting it to 9 qualified persons who signed off on some of these documents. I believe one of them was 8, one of them was 9. But there are quite a few independent QPs in that mix. So rather than just get back to the PFS and put out that, we used the time of the last couple of months to put out this initial assessment as well. But the delay was mainly to square some of the assumptions on operating costs as well as royalties and make sure that we had QP sign off on that. and make sure that we adjusted the model. There could have been a scenario where we put up the PFS based on previous International Seabed Authority ISA assumptions back in late 2024, early 2025. But there was no need in our view to rush some of that out, given that we knew post-Trump election that this path was going to be viable. So first, we had to do a lot of the legal diligence to make sure we were all on board with this new direction. A lot of board discussions, a lot of late nights talking that through. And then from that point, put the applications together, get them launched. And then from that point, adjust the PFS to some of those new assumptions. And then the cherry on top is the initial assessment, which we feel very strong about as well. The initial question from Network Diligent A196 was the partnerships that we've lined up and other ones that might be coming. We feel good about where we are onshore. We feel good about where we are offshore. It would be great on the partnership front to talk a little bit more about offtakes again. A few years ago, it was all we would ever talk about. Offtakes coming from potential automakers or steel makers for the manganese product. Now that we're getting closer to production, we think those conversations are ripening again. But I think the biggest potential partner that you should think about is somewhere within the U.S. government. One of the key reasons that we feel strongly that the permit is going to be headed our way is that there is a dire need for this material, given that the U.S. has no primary production of any real size for nickel, manganese, and cobalt. So it's one thing to give somebody a permit to say, all right, go do it. Good luck. We hope you have enough money. Well, as I mentioned, the Office of Strategic Capital within the Department of Defense has a big mandate and a big balance sheet. There are a lot of other agencies that are now kind of hitting the ground running, trying to allocate capital, and they rather find a big chunky place to put it to say, look, if I'm going to do the work with my small team and I have $100 billion to spend, why not go to somebody who has the ability to bring mineral independence to the U.S. as opposed to say, let's invest in 30 different projects at $10 million each. That's not going to move the needle. So I would say the most exciting prospect in terms of future partnerships might be on the government side, but offtakes with customers is also something that naturally is going to be at the forefront once you're at pre-feasibility stage, which we are, once you're a developer rather than explorer, which we are, and then once we get closer to that permit. So it's another reason why, even in advance of a final commercial recovery permit, there's quite a bit that we can tell folks about where this is likely headed to give confidence to customers under NDA. Next up, we have a question here from, let's see, Mr. Saul. Craig, nice of you to do an AMA. Thank you. First of all, Jared's repeatedly said TMC would be processing nodules far sooner than anyone imagined, but public guidance has moved production further into the future. You list a few decks that had updates and they continue to move to the right. Why does the timeline keep slipping? It's a great question. I don't want to blame everything on the ISA, but here goes. A lot of it has to do with the fact that the ISA timeline, going back to 2021, has continued to slip. The initial target for the ISA mining code was 2020. Then it was 2023. Then it was 2025. Now, looking back, should we have been more skeptical, perhaps, of the ISA guidance? Possibly. But we were not in a point where we wanted to be spending hard-earned shareholder money, not knowing when a permit might come. So rather than say, look, let's get ready for production and start spending that, such as, the minute an ISA permit comes, we're ready to start production, that would have put us in a pretty bad position and the company probably wouldn't be around. So while it was a difficult series of Band-Aids being ripped off, I now feel like we are in a position where we do see that clarity. So we're no longer at a point where we have to get one, then the other. Now we're in a point where it can be a parallel path. Now we're in a point where we can have the confidence to get ourselves ready for commercial production, even as the final legal traps are being run on a commercial recovery permit that we have such confidence in. But look, as a mining investor, the reality is it's hard to point to any single resource project of any size that hasn't gone over budget and that hasn't gone beyond the timeline initially stated. That is just a reality. Mining investors are used to it. Research analysts are used to it. And frankly, it's one of the reasons that when you read a lot of the research analyst notes that have come out in the last couple of days, people aren't really focusing on Q4 2027. In fact, some of the research analysts have pulled forward their timeline versus their models because they always, bake in some conservatism. And, I know H.C. Wainwright was initially looking quite a bit later in the decade, and they've continued to pull it forward the more research that they've done on TMC, but also on the Deep Sea Minerals Hard Resource, the Deep Sea Hard Minerals Resources Act and the NOAA regulations. So another, 2 years to get into production is really not that far away in the context of land-based metals and mining, where it takes on average 20 years to go from discovery to production for a nickel project, and somewhere between 15 and 17 years to go from discovery to commercial production for a copper project. So we still feel very good about the timeline. We recognize it's frustrating to see the can getting kicked down the road, but we think we're past the worst of it, because the International Seabed Authority, they no longer have any bearing on when we're getting into production. And I would also note the US process is not going to be something sequential where we have to wait for that piece of paper to then get ourselves prepared. We now have the right partnerships and sufficient confidence that both can be done at the same time. Said in a very summary fashion, for the longest time since we went public and since I've been with the company, TMC has been a taker of timelines. And sometimes we've had to just grin and bear it. We've had to, drink a beer and punch a wall and say, well, I hope the ISA gets there. And their public documents would say, all right, here's our new timeline. And we have no choice but to say, all right, well, based on this timeline, here's when we expect to get in production. Now we can completely divorce ourselves from that process, and we can be drivers of the timeline based on getting ourselves ready under the expectation that a permit could be coming. Another question coming up here from Old Advertising 3245. Assuming TMC receives approval and begins commercial harvesting, how scalable is everything going to be? Do we anticipate the U.S. government supporting a more centralized, protected model, effectively giving TMC a lead and limiting early competition? Or do we expect a broader global race where we're going to have to compete? Look, I don't think the U.S. government is going to go out of their way to get other contractors into production. I think the reality is there's only a few names that we can think of that have the capability legally to go through this U.S. process, given the lack of ties to, let's say, a state-owned entity that would otherwise have issues with their home country being a signatory to UNCLOS. So I think naturally, organically, we are going to be one of the few that's able to take advantage of this U.S. process. I wouldn't say the U.S. is going to go and do anything to discourage competition. In fact, we're seeing quite the opposite. The U.S. is looking to make agreements with countries like the Cook Islands and others in the Pacific to say, listen, if we want the U.S. to be a hub for deep seabed minerals, if we want the U.S. to be a maritime power again and get back into shipbuilding, as was one of the directives, again, of an executive order earlier this year, being a central hub for the refining of nodule-derived intermediate products, and then maybe one day even processing those nodules initially, that's something the U.S. can and should do. And TMC would be the gorilla in the room doing that. We would be the ones supplying more feedstock than anybody else. But having others at the table would be perfectly fine. And again, putting on my hat as a former investor, I wouldn't want to only have one company to invest in. It's helpful to have a little diversification. You don't always want to just be going after this idea and then saying, well, why is it that nobody else is following behind? At the same time, as we noted during our strategy day presentation, if you truly want to be a revolutionary company, you have to be able to do something different. You have to be able to think in a way that nobody else is, which we're doing. And you have to not be discouraged by a lack of initial competition. So typically a lot of people think, well, the hardest thing about startups is there's so many others you're competing with. One of the hardest things is knowing that you're out there on an island and you're trying to do something that nobody else has done before. And you look around sometimes and say, why is it that others don't see this obvious opportunity? I talked to a lot of our key shareholders. I talked to First Manhattan, for example. Zach Widrow, their CEO, he has been a strong supporter of us. He's a board observer for TMC. And what we talk about quite a bit is, look, why is it that some other funds haven't stepped up yet? Why aren't you seeing the BlackRocks of the world come out and build a position? And we think eventually that's going to be coming. But oftentimes, when you're a PM or you're a CIO, you look around and you say, well, I'm playing squash with this or that guy, and he's not heard of this idea yet. And the more we get, people comfortable with this idea, the more we check some of these key boxes, such as a pre-feasibility study, the more research coverage that we get, the safer we make it for a lot of institutional investors and strategic partners and government agencies and potential offtake partners to come on board. So building that army requires a lot of support. And really, one thing you can do to put a shot in the arm of that timeline is getting a lot of retail support. And we're happy to see that across the Reddit message boards and stock twits and Wall Street bros. That goes a long way. But you can't be discouraged by the fact that you look around and sometimes not everybody gets it. Trust me, in 5 years, they're going to look back and they'll get it. They'll look back and think it was the most obvious thing ever. Actually, it was, I think my wife's probably going to hate that I'm going to use this as an analogy. But in the Eagles documentary, Joe Walsh talks about the fact that, sometimes everything feels very chaotic in your life and it's random events crashing together. And then you look back on it years down the road and it seems like a finely crafted novel. That's what's happening with TMC. It seems like it's a lot of chaos sometimes. It seems like the ISA process and then the US process, and you have attacks from NGOs and you have a media onslaught. You have things like dark oxygen. You have a lot of things going on, and sometimes it's hard to make sense of it. You're going to be able to look back soon and say, of course this was going to happen. The resource is there. It's very large. It's high grade. It's abundant. This is going to get developed. TMC is further along than anybody. We're better capitalized than most of these other companies looking to do it. And we have partnerships with Korea Zinc, the largest smelter of non-ferrous metal in the world. We have Allseas, one of the most amazing engineering firms offshore, and they've constructed the world's largest construction vessel. We have advantages that very few others do, and this is going to happen. So I would say don't be discouraged by lack of competition. This obvious idea will be obvious to everybody soon. Not everybody has the nodules to be able to invest early and see us through innings 1, 2, 3, and 4. They'd rather pick inning 5 and then sell at inning 8. That's not the way to make the most money here, and we're happy that our retail shareholders are with us. We have time for maybe another 8 minutes of questions. We're going to go 45 minutes, but I'm having too much fun, but my voice is probably going to give out soon enough. There was a second question actually from Mr. Saul on the PFS using long-term metal prices that look aggressive, cobalt in particular. And several qualified persons are TMC employees. Well, there were a lot of independent qualified persons as well. It's not atypical at all to have, a lot of this work and data provided by the company and qualified persons within it, including Tony O'Sullivan, who, again, he was head of base metals exploration at BHP. He is qualified in a way to talk about seafloor minerals that I would venture nobody else on earth is qualified to stand up to him. But there are many other outside independent experts, such as Ian Lipton at AMC Consultants, who was signing off on the resource going back to the original technical reports. Again, as a NASDAQ-listed company, we have an ATM, for example, which we tend not to rely upon. But it means that every quarter, we have to go through a diligence process where we have consultants, such as AMC, who sign off independently on our reports, have to get on a call and say, okay, well, let's review these assumptions again. Let's look at everything with a fresh set of eyes. Let's make sure that the counsel for various bankers can get comfortable that we are putting our names on the line as an SEC regulated company. So there is nothing to worry about on that front. This is about as buttoned up as you can get. And these numbers have been poured over by some of the most qualified persons that I've ever worked with. In terms of the forecast for these commodity prices, sure, they're a little bit higher than where prices are today. One of the reasons for that is that nickel margins are underwater for the vast majority of producers. And we're not taking numbers that we're just putting our finger in the air and forecasting. We're relying upon forecasts from Benchmark Minerals. We're relying on forecasts from manganese from CRU, and they see emerging obvious deficits. One of the things to keep in mind with metals and mining, and Jeff Curry, former head of commodities from Goldman Sachs, he would always say that commodities are not anticipatory assets. They don't accurately discount all future information the way that, if you at least believe in efficient market theory, common equity should discount all future information. For commodity markets, much of the trading is based on commodity trading accounts, CTAs, based on short-term inventory swings. So you're not always looking at the underlying metal price as an efficient vehicle to discount all future information and all future probabilities. So that's why sometimes you can have a market, let's say like copper was for many years, where everyone knew it's got to be here and it's 50% lower for now, but that's going to change once some of this inventory clears out. Yes, future markets can be useful mechanisms to perhaps smooth some of that volatility. But our takeaway is, look, we don't need metal prices to be a lot higher for us to be profitable in really any cycle, because nearly half of our revenue is nickel. but a little bit over half of that revenue is actually the byproduct credits such as cobalt, copper, and manganese. And it's hard to see all of them moving in the same direction at the same time. But even if you cut all of them by a very large margin, we are still profitable because you get all four in one. So there's not a whole lot to worry about on the commodity price side either. I have one more question. I'm getting some funny ones. Thank you for some of the TMC group for putting it in our chat and making me laugh here in the last 5 minutes. There's some of these that I can't necessarily answer, but thank you for the colorful language. Ping me after at craig@metals.co. Happy to answer any emails or through our official TMC website. Go to investors.metals.co or just email at investors.metals.co and somebody will get back to you. One more question here from Murdoch 1975. With China capable of manipulating metal markets, how will TMC combat price manipulation to ensure retrieved and processed nodules retain their perceived value per ton? TMC alone cannot combat price manipulation. The US government alone cannot combat price manipulation. What the US can do is say, look, China, we've seen what your playbook is. We've seen what you've done with nickel prices. We've seen what you've done in export restrictions with gallium, germanium, graphite. China is able to, take lower return and think in terms of generations. There's an advantage sometimes of a, less free, multi-generational, centrally organized government. Because you can say, look, I don't care what your return is. Who cares about ROIC? We want to dominate nickel, flood the market. That's happened at a few points. The way you can combat it is to have an agreement with the government that you're working with, such as the United States, and say, well, we don't care about the short-term fluctuations. We're going to do a long-term offtake agreement, or we're going to do a long-term price support agreement. Look at the MP Materials transaction. That's exactly what was part of that deal. There is a minimum floor price for some of the products produced by MP. That's how you combat it. You fight fire with fire. And we think the US has now opened up their toolkit in a way that previous administrations have not been able to. We have about 3 minutes left, so I'm going to scroll down a few. I can't believe how many we have here. I'm flattered that there are so many people here with us. Somebody who has 420. I already took the Pistons and Spurs in the next NBA Finals. Wondering if you're from Michigan, if you have opinion about Detroit and Michigan sports resurgence. I do. I think the Red Wings are fantastic. Big fan of Dylan Larkin. I'm a big fan of the Pistons as well. Love seeing them compete very heavily against the Knicks this year. Cade Cunningham is growing into the leader that we thought he should be as the 1 overall pick. As far as Michigan, they can go to hell. I'm a Notre Dame fan. I grew up in Michigan, but I went to ND, and all eyes on CJ Carr and the Fighting Irish. We're going to be back in the playoffs and back in the national championship game. Pertaining to TMC, given the immense volume of how many nodules you collect, could we please get a nodule gift shop going soon? Yes. I think one day you can see that. In the meantime, we have to make sure that we get some merch up and running. So I'm looking at you, Dan. I'm looking at you, Rory. Let's make sure that can happen. I'm also going to make sure that we can do the TMC Strategy Day events again and again and again. Sure, it may not be a pilgrimage to Omaha like for Berkshire, but everybody likes coming to New York City. I certainly like staying in New York City. It's a great place to be. It's a great place to meet investors. And we're looking forward to doing not just our Strategy Day over and over, but also doing another one of these Reddit AMAs again very soon with their chairman and CEO, Gerard Barron. So with that, thank you all for taking the time. Again, I'm Craig Shesky, CFO of TMC. I'm proud to be here. I'm a big shareholder of TMC. I'm a big believer in this. We have a lot of new people have been joining because they see this mission and the energy that the retail crowd brought to this day and brought to our Reddit AMA has been outstanding. We appreciate your support. We appreciate everything that you've been through with us. And it's very, very heartening to see where this company is going. So thank you again. And feel free to follow up and feel free to join our Q2 conference call occurring at 4:30 p.m. on August 14th. Thank you and take care.